Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 4th of August 2024, and we're publishing our Gold and Silver Weekly Update for the weekend in the 2nd of August. Gold and silver rose over 2% last week, and we may see even greater strength in the next few weeks. Why do we say that? Well, let's take a look. Now first, just a quick reminder, we've set up a second channel entitled Finances Do Matter, covering a whole array of financial topics. We've placed a link in the description box and comments section below for those who've not as yet joined that channel. Now gold rose $54 last week, rising from $2,388 to $2,442. Having hit a high of $2,486 and a low of $2,370, a rise of 2.3%. Gold spread between high and low was a very reasonable $116. Last weekend we said gold would trade between $2,340 and $2,450. Gold on Friday exceeded the top of our range early Friday morning, but came back within it after a few hours. In sterling terms, gold finished the week at £1,910, up £54 on the week, and in euros it closed at €2,242. That's up €39. Silver rose 63 cents, moving from $27.93 to $28.56. Having been as high as $30.54, so a significant high, albeit very briefly, and a low of $27.35, a rise of 2.25%. The difference between its high and low was $3.19, and it does appear that silver is oscillating quite a bit. Save that, similar to the previous week, there was a spike lasting only a minute or two of over $1.50. Otherwise, the range would be within a more moderate $1.50 to $2. Last weekend, we predicted silver will trade between $28.25 and $30.25, with an outlier range of $27 and $30, which, apart from the 2-minute aberration, did that quite comfortably. In sterling terms, silver closed up 61 pence at £22.36, and in euros it closed up 0.46 euros at 26.25 euros. Gold to silver ratio stands at 84.8 to 1, which is not comforting for silver at all. It really does need to be in the early 70s if one is to gain significant confidence in it again. Bitcoin stands down nearly $7,000 at $60,671 after a few brutal days, primarily due to Middle East geopolitical issues. Equities were lower too. The Dow Jones down 852 points at 39,737. The S&P 500 down 113 points at 5,346. The Nasdaq Composite down 581 at 16,776. And the FTSE 100 index down 111 at 8,174. Oils also lower, fortunately for those who buy gas at the tank. Brent crude closed down $4.32 at $76.81, and WTI crude closed down $3.64 at $73.52. The dollar index took a hit, down 1.11 at 103.20. If we take a look at the gold trend last week, it opened higher, then dipped, then gradually rose from Tuesday onwards, peaking Friday midday, a little sell-off and a small recovery at the end. Well, last week's economic data revealed lower than expected July ADP employment figures, which were down 33,000 from the previous month, but higher US productivity for quarter 2 at 2.3% compared with 0.4% the previous quarter. The US employment figures on Friday for July were much lower than anticipated at 114,000 new jobs, compared with expectations of 185,000. And the July unemployment rate rising from 4.1% to 4.3%, the highest level since October 2021. Showing at last that past interest rate rises have at last begun to dampen what the Fed used to perceive, but apparently no longer does, to be an inflationary tight labour market. The most important day last week, though, was Wednesday, and although interest rates remained unchanged, Fed Chair Jerome Powell did make clear that an interest rate cut was on the table in September if inflation eases again. Well, If the oil price remains at the current level and employment growth remains subdued, then there's every possibility that this may be the case. Now, in terms of economic data coming up, we have services PMI reporting on Monday, consumer credit on Wednesday, and weekly jobless claims on Thursday. So really, there's little economically likely to affect markets. That said, geopolitically, there could be a lot. The Israeli-Palestinian conflict is heating up once again, with talks ending without a result early today. Several countries have urged their nationals to leave Lebanon, with the US warning its citizens to do so on any ticket available, as fears grow of a wider conflict in the Middle East. It's very rare this happens without a severe likelihood of some form of unrest, putting it mildly. Iran has vowed severe retaliation against Israel, which it blames for the death of Hamas political chief Ismail Haniyeh in Tehran on Wednesday. We suspect these tensions are indeed going to have an effect on markets depending on how they pan out. It is difficult not to be positive precious metals this week and negative equities until this situation is decided and to some degree sorted. So, looking at gold, we can see that it not only had a strong last week, but also the futures market is showing higher figures than the next resistance barrier of $2,500. This suggests gold will break this figure this week and certainly the following week if it doesn't quite get there in the next 5 days. Technically, there is massive support at the 2,400 level. Silver, while stronger last week, is really struggling. It does not have the same safe haven impetus and central bank buying support as gold, but does have industrial demand benefits greater than gold. It should frankly be strengthening, but any geopolitical conflict short-term may increase its monetary asset value, but could decrease its industrial demand component, especially if international trade is affected, and so this schizophrenia remains with silver. Some analysts are predicting that monies may come out of the gold and silver markets as investors run for liquidity, especially if there is a geopolitical conflict. That could very well be the case. You cannot rule that out. We see a slightly different picture though, with the UK Central Bank lowering rates by 0.25% last Thursday to 5%. It's only a matter of time before Europe and the US does the same very soon. This will more than likely prove beneficial for gold in particular, especially while geopolitical uncertainties exist. So we're of the view that gold may continue to rise this coming week, and if for some reason it does not, it will certainly make up for it the week after. Silver will follow gold's lead, but we suspect, unfortunately, not as strongly. Taking all of this into account, our gold forecast is a trading range of $2,400 to $2,500, with $2,375 and $2,550 as outliers. Silver, we envisage, will trade between $27 and $30, with an outlier range of $26.50 and $31 as outliers. What do you think? Please do share your thoughts. Thank you so much for listening. We'd appreciate it if you'd give this video a thumbs up, subscribe, press the bell sign, pop on over to Finances Do Matter and subscribe there. Well, have a really prosperous week ahead. And if it's not this coming week, then perhaps the week after will be the one that will give you the greatest gains.